Welcome to our much awaited session of RBI Circular Gist. Since this is the first RBI Circular Gist for the year 2023, I want to sincerely thank you for giving us so much of love in the year 2022 in terms of viewership download of RBI Circular Gist, making us the most popular platform for RBI circulars. And in case you are new to the platform, don't hesitate to subscribe and you can join our dedicated courses in the links provided in description. Now running a special course for manager scale 3 and scale 4 for Central Bank of India. I want you to go through all the platforms that are there in the entire internet, and you will be astonished to find out our results, our success rate, our content, our delivery style, everything way ahead than anyone else. So if you find it beneficial, then only join, because when it is about your career, you must join the best or nothing. Okay, with that note, let's straight away go through the RBI circulars for the month of January 2023. And the first circular for the month ka pehla circular, RBI rationalizes reporting foreign investment in single master form in the farms portal. One thing, apart from the circulars of the RBI circular of January 2023, we are going to read about the connected contents, because it is not straight away the questions from a circular is asked. Connected concepts are also similarly important. Okay. So now the RBI rationalizes the foreign direct investments reporting, and when it comes to reporting, the regulated entities and the ones who are entitled to report something to Reserve Bank of India is a very serious point, because if they fail to do so, there could be high penalties. And in exam point of view, all the portals that are related to reporting of regulated entities are important. You know, FDI is a part of foreign exchange. We read it in our internal class of forex. So if a foreign direct investment is directly reported by Fed, that is not Federal Reserve, that is the Foreign Exchange Department of Reserve Bank of India, and reporting of foreign direct investment is mandatory, and failure to do so can attract penalties. Hence, entity receiving the foreign investment needs to report it in Farms portal. Farm stands for Foreign Investment Reporting and Management System. It is an online reporting platform for reporting foreign direct investment. Not only banks, any entity, any corporate, those who are receiving the remittance in terms of FDI, they need to report it. Okay. So now, since we discussed about one portal of FIRM, let's discuss some similar reporting portals of Reserve Bank of India. You know, in recent exams, if you take SBI CBU exam, HITTERS, the Foreign Exchange Transaction Electronic Reporting System full form, was asked twice in last three SBI CBU exam. So we will be discussing all reporting platforms. The first one in the list, I will take it to the big screens so that you can read, take a screenshot and find it out. XBRL, the Extensible Business Reporting Language. It is a language for the electronic communication of business and financial data. Daksha portal we discussed in uh, probably in September or October RBI circular gist. Also asked in the exam recently, RBI's Advanced Supervisory Monitoring System, balance of payment portal, all the data related to balance of portal is updated here. The name is sufficient to understand. Player portal, full form Foreign Liabilities and Asset Information Reporting. It is an annual return on foreign liabilities and asset required to be filed by an Indian company and LLP to RBI within a prescribed due date. Then comes the CMS portal. This is nothing but the complaint management system. Head portal, Foreign Exchange Department. All data related to foreign exchange is reported here too. PCRPCD, the Processing Center for Rural Planning and Credit Department, all info related to NABARD, assistance to RRBs, rural credit flows, MFIs are reported here. SISB stands for Central Information System and Banking Infrastructure, asked 2 years back in a lateral entry exam. I don't remember exactly in which exam. maybe not in BOM, but it is asked, I think it is asked in Indian Bank SO exam. Farms portal, foreign investment reporting management system, we read about it. EDSP, electronic data submission portal, data collector collects various data from regulated entities. ADEPT portal means automated data extraction project. It was initiated for extraction of data from banks to RBI, and it's in the final stage of implementation. FITRS, again important, foreign exchange transaction electronic reporting system, FITRS. Okay, let's go to the next one. RBI's role in Forex. As we discussed about Forex for FDI, so we are discussing a concepts that are closely related to one circular. And I always say, if you look into the bank exam questions, you will find 85% questions were asked from RBI various circulars. Sometimes you complain that no question is coming from RBI circular. This is nothing like that. If a question come from Forex, the Forex related updates is posted in RBI's website, in RBI's master circular. You will find all of them inside RBI. But for you, we dig into the RBI circular vault and take out the gems, the pearls for your exam preparation. Okay, and those who were complaining got a big rebuttal from IBPS when SBI CBO exam was conducted. Last 2.5 years, RBI circulars only asked in the question paper, nothing else. 100% question from RBI circulars. Okay, so never underestimate RBI circulars. These are the Bibles for professional banking exams. So the forex is ruled. The rules of forex is to be framed by Government of India under Section 46 of FEMA Act, whereas the same FEMA Act, Section 47, empowers Reserve Bank of India to regulate foreign exchange. And as per Section 10 of Foreign Exchange Management Act, RBI is empowered to appoint authorized person to deal with foreign exchange. Though Reserve Bank of India is given the power to deal with foreign exchange, but Reserve Bank of India cannot do it by its own. By its own, it has to appoint authorized persons to deal with forex. Okay, and remember, primary dealers are the authorities that are entitled by Reserve Bank of India, are the banks that are entitled by the Reserve Bank of India to deal with uh, government securities. Okay, and standalone primary dealers are not the banks, NBFCs, those who only deal with the primary dealership, that means in government securities, trading of government securities, buy and sale of government securities. Similarly, authorized dealers are those who are on behalf of Reserve Bank of India buy and sell the forex from the public. And this is the entire structure of FEMA Act, and it empowers two entities deal with the rules and regulations. Central government leave them behind, they do the rules, they frame the rules. Reserve Bank of India do the job of a regulator. They appoint authorized persons, and again authorized person is divided into two parts. Banks are given the authorized dealership. They are of three categories: AD1, AD2, AD3 category banks. AD1 category banks are given all the powers and all the free hand deal with foreign exchange. Authorized money changers are those who only buy and sell and convert rupee into dollar, dollar into rupee, rupee into ruble, rupee into euro, etc. Right? And they are also authorized money changers are full fledged and restricted. We read in detail about all of them in our all in one forex session, right? Again, above the authorized dealers there is the FEDI, Foreign Exchange Dealers Association of India. They don't regulate, they don't frame any rule, but they deal with the customs, the practice, the market hours in foreign exchange market. Clear? Yes. Now there are so many things of FDI related to FDI policy. We read it in our internal class, but the most important one is the chart of FDI limit. FDI can come to India in two sources. One is automatic route, the other one is the government route. In automatic route, the FDI comes without any approval, but through government route, where the sectors are sensitive, government restricts the flow of foreign investors. When there are investors from foreign countries, they are there to manipulate the decision making of that entity. that could in turn harm our national policy or national interest. So that's why there are certain restrictions. In public sector bank, only through government's approval, only 20% of investment can be done through FDI, whereas the limit is 74 percentage for private sector banks, small finance banks, payments bank. But out of that 74 percentage, 24 percentage is from the government's approval route. The other one is from automatic route. Similarly, in insurance and pension, it is 74 percentage, but the routes are changed. Government route 74 percentage in pension, automatic route insurance sector gets FDI of 74. NBFC, white label ATM, credit information company, asset reconstruction company get 100 percentage FDI in automatic route, and these 4 5 points are important for your exam point of view. Apart from this, they ask the biggest source of FDI to India, name these countries, and always Mauritius, Singapore, etc. remain in the top list. Apart from USA, Japan, there are reasons behind. The Indians, those who deal with black money or hawala transaction, they send their money to uh, tax havens, countries of tax haven like Mauritius, Singapore, etc. And the money is routed back through India. So that in a way, Indians are the highest foreign direct investment. Indians do highest FDI in India. So a contradictory statement, I know, but yes, our black money comes through other route and again gets invested in India. So similarly, the low interest rate countries like USA, Japan, though USA rates are being hiked, but earlier their rates were way low than India's. That's why the foreign direct investment flow came highest from these countries. Okay, now let's discuss about RBI's modifies Basel III capital regulation and eligible CRAs. Not only banks, NBFCs, urban cooperative banks, credit information companies, credit rating agencies, all the regulated entities of Reserve Bank of India needs to maintain capital adequacy ratio in line with Basel III norms. So in that regard, SEBI has recently removed one of the CRAs, that is Brickwork Ratings India Private Limited, from its list, and thus RBI has removed it, citing some sensitive issues along with the capital adequacy norms. And after that, now the Reserve Bank of India has recommended following six entities as uh, the approved CRAs. And you know the difference between CRA and CIEC, credit rating agency and credit information company. And why the credit rating agencies are important? They give rating to NBFCs, private companies, private entities, those who issue bond, those who raise fixed deposit, etc. from public based on the ratings, the deposit interest rates, the loan rates are decided. So that's why CRAs are important, and these are the six entities now recommended by RBI: Acute Ratings and Research Limited, Credit Analysis and Research Limited (KR), CRISIL, ICRA, India Ratings, Infomerics. These are the six ratings that are approved by Reserve Bank of India. And as we are discussing about the capital adequacy ratio, time is to look into the CRARA norm for India capital to risk weighted asset ratio, that is 5.5 percentage in CET, common equity tier 1 capital, CET 5.5, but this is the Indian standard. The global standard is 4.5 percentage prescribed by Basel. Okay, and the additional tier 1 capital requirement is 1.5 percentage, total tier 1 7 percentage. Why I have bifurcated all of them? Because in exam they ask either what is the total tier 1, what is additional tier 1 plus tier 2, tell us, just to confuse you in the exam hall. They make such kind of gimmick, so you need to understand every single parameter here. Yes, tier 2 is 2, total capital ratio stands at 9 percentage, whereas the global standard is 8 percentage. Capital conservation buffer stands at 2.5, the total ratio is at 11.5 percentage. What percentage of all this? These all are a percentage of risk weighted assets. We have also shared in internal groups about the risk weighted asset, the metrics of risk weighted assets. Clear? Yes. So this is how we go through the classes. If you find it beneficial, then do join us. Yes. So now the GSEC bidding and RBI asked participants to use e-Kuber facility. So due to some mistakes in yield range setting in government securities, RBI has mandated all participants to mandatorily register and and trade with e-Kuber. E-Kuber is like a stock exchange for government exchanges and maintained by Reserve Bank of India. This is the trading platform for government securities, and the tradings that were happening outside eCuber were having some big fat errors, big figure errors and fat finger errors, and that's why now Reserve Bank of India has mandated everyone to mandatorily shift to eCuber. Many a times discussed about eCuber. So yes, now, one of the most important circulars of the month and most important task in front of the branch managers, branch officials who are engaged in branch in last 2 months. Uh, in last 2 months, okay. So RBI extends the deadline for new bank locker agreement. From last 2 months, my banker colleagues were repeatedly telling us that we are keeping busy to call our existing locker holders, locker customers to to give us a new agreement, right? So why all this happened? Why new agreement? The agreement was there already, so why the RBI has insisted upon new locker? Behind all that, there is a there is a high court ruling in Kolkata. Subsequently it is ruled by Supreme Court of India. So we will look into that interesting case in this circular. This session is going to be more and more crucial, filled with more and more crucial information. I want you to invariably like this video, share in all your internal bank groups, so that you and your friends get benefited out of this knowledgeable session, right? So now, as my banker friends were working hard to cover their agreements, but they could reach halfway there. Looking all that into consideration, Reserve Bank of India has now extended this. The new locker agreement is to be created by 31st December 2023 mandatorily. Okay. So now it has come to notice that RBI found that only 50% customers have done their renewed their agreement. Okay, and the miles 50% of the agreement has to be made by Jan pending 50% agreement is to be made by Jan 30, and rest 75% by September 30, and finally 100% new rent agreement is to be completed by December 31st 2023. Now a sigh of relief for all of you. In cases where the operation in lockers have been frozen for non-execution of agreement, the same needs to be unfrozen with immediate effect. Further, banks have been advised to make necessary arrangements to facilitate execution of revised agreement. In August 18, 2021, RBI has said banks shall have a board approved agreement for safe deposit lockers, and the locker agreement should be in line with IBS consultation. So many a times question is asked, what kind of agreements forms are mandated by IBA? So locker agreement is one of them. The education loan policy is one of the standard loan policy that is framed by IBA, right? And apart from the bipartite settlement and salary of government banks. Okay. So banks should ensure banks should ensure that there will be no unfair conditions. There will be no unfair conditions in the new locker agreement, and banks should invariably mention banks should invariably mention about banks should invariably mention about the role of their staffs in case of staff negligence, and theft, dacoit, and anything happens. Then what will be the consequences? How the customer will be repaid his dues? Okay, and banks should not mention like that, like if in case of theft, burglary, robbery, dacoity, building collapse, we are not responsible. Such lines should not be there, because there are insurance policies and customers needs to be compensated on that. And Whatever loss is there, loss happens to the locker holder in case of the employee's negligence, 100 times of the locker agreement fee of a year is to be paid to the customer, right? No matter what is the valuable kept inside. Okay, so that makes it around 1200, 12 1300 is there, the locker fee. So it becomes 1,20,000, 1,30,000 you get in case your locker is get locker is theft, okay, due to the negligence of the bank employee. So this is the new locker rules and interesting case of Amitabh Dasgupta versus UBI, which changed, which made you do the new locker agreement. Okay. So as per new norm, the liability of bank will be limited to 100 times of its annual rent in case of fire, theft, building collapse, or frauds by bank employee. Can you see on your screens? This could be your question. You need to understand what is happening inside your bank. Clear? Again, the review also takes into account of the principles enumerated by the Honorable Supreme Court in Amitabh Dasgupta versus UBI, Union Bank of India. Okay, what happened in the case of Amitabh Dasgupta? Dasgupta's mother took a locker rent from UBI. Her mother included Dasgupta is included as a joint holder in the locker. Bank have broken open the locker for the non-payment of dues. Dasgupta visited in the year 1995. Dasgupta visited the branch and claimed all the dues were paid in time in for that locker, and he proved that the rent is paid previous year and claimed that 5 to 7 ornaments missing. Subsequently, he files a case in 1995, and in the year 2021, SC orders in favor of Mr. Dasgupta to give him a 6 lakhs compensation. Okay, so to keeping all of this in mind, RBI has changed the following things from Jan 2022. Banks will require to incorporate a clause in the new locker agreement prohibiting the hirer from keeping anything illegal or hazardous in locker. Banks need to maintain a branch-wise list of vacant locker and the waiting list. The bank shall acknowledge the receipt of all application and allotment a waiting list to them. Banks would need to adopt a model locker agreement framed by IBA. Okay, and banks shall not liable for any damage or loss for the act of God. Okay, in case of earthquake, floods, lightning, etc. And to ensure prompt repayment of locker rent, banks are allowed to obtain a term deposit at the time of allotment of locker. Banks will have the discretion to break open the locker following due procedure if the rent has not paid by the customer for 3 years in a row. For 3 years in a row, look into the minute points. If 3 years in a row you don't pay your locker rent, your locker is liable to be break open by the bank officials. Okay, a copy of the stamped locker agreement in duplicate signed by both parties shall be furnished to the locker hirer to know his or her rights and responsibilities. If there is any event of such as merger, closure, shifting of branch, customers shall be intimated at least 2 months in advance, along with options for them to change or close the facility. Okay, all the new mechanical lockers to be installed by the banks shall conform to the basic standards of BIS, Bureau of Indian Standards. There are some other minute points. You can go through all this after the PDF is handed over to you. The nomination in the locker is done as per section 45 ZC. We will not go into that minute detail, but remember, breaking open is allowed at the cost of the hirer if the key is lost. Government enforcement agencies have approached the bank with orders from the court, then they can do it. If the locker rent is not paid for 3 years, banks are entitled to break it open. An inoperative locker means a locker which is not operated for 7 years. And the locker hirer cannot be located even if the rent is being paid regularly. The banks have the liberty to transfer the contents of the locker to their nominee or legal heir or dispose the articles in a transparent manner. Okay, we read a lot about connected topics related to circulars, because this month there are only 4 or 5 important circulars and we are not adding anything which is not at all necessary for your exam point of view. Focus is one thing that is necessary for your exam preparation. For competitive exams, you should not prepare everything on earth. No foreign investment cap for sovereign grain bonds. You know, in the year 2022 budget or the last budget, there was a sovereign green bond issued by, not sovereign gold bond, it is sovereign green bond issued by, announced by the Madam Sitaraman in the union budget. But that is for the India's ambitious green energy project or ambitious carbon emission reduction in carbon emission. India is running at a faster pace towards becoming a zero carbon emission country. The Reserve Bank of India announced a fully accessible route, FAR. We are going to ask it in MCQs. So remember it. For the investments by non-residents in government securities, inclusion of sovereign green bonds. So there are some fully automated route where no cap of foreign investment is there and no approval is required. So sovereign green bond is kept in that list. You know, we discussed about FDI where you have a government route and approved route. Government route and automatic route. Government route requires approval. Automated route needs no approval. So there are items like white label ATM, CIC, ARC, which are 100 percentage, which are allowed 100 percentage FDI. Similarly, in sovereign green bond, 100% foreign investment is allowed. Are introduced by RBI, wherein certain specified categories of central government securities are opened for fully for non-resident investors. Non-residents are the foreigners. Non-resident Indians are the Indians who are gone abroad. Minute difference. This comes ahead of the two new auctions in sovereign green bond. Total in the FY 2023, Government of India is going to auction 16,000 crore of sovereign green bond. It will be done in two phases, 8,000 in 25th January, 8,000 in coming 9th February. Okay, and this is done for the government's commitment to reduce the emissions intensity of its GDP by 45% before 2030 and from 2005 level. Okay, reduction of 45% from 2005 level and achieving 50% cumulative electric power installed capacity from non-fossil fuel based energy resources by 2030. Okay, now with that we come to an end of these circulars. Now this is time look into the MCQs of January 2023. I hope all the circulars connected contents for the month was very much beneficial for all of you. If you like us, do subscribe and share in the groups, your connected groups. Insist your friends to join to pursue a career in banking. Any banking exam, we produce 85% of result. And you also know that our content, how our content is different than all others. Okay, and with that we come to the first question. RBI rationalizes reporting foreign investment in single master form, or which we call SMF, on Farms portal. What is the full form of FIRM? Here are the four options in front of you: foreign interest reporting management system, foreign investment reporting and management system, and foreign investment reporting and monitoring system. B foreign, C financial. This is the minute difference here. And I give you 5 seconds to answer. Take your time. I know it's very silly question to ask you. We discussed about it thoroughly in today's session. So it is foreign investment reporting and management system. But apart from this, you have to go through all the reporting portals of Reserve Bank of India because they are asking questions from it. So, Securities Exchange Board recently cancelled the license or certificate of registration of one of the credit rating agencies. Which one of them, which one among the options is that credit rating agency? KR, Brickswork, Moody, ICRA. 5 seconds again to you. Yes, it is Brickwork Ratings India Private Limited. Option number B again is the right answer. Again, who of the following is not a credit rating agency? CRISIL, Brickwork, TransUnion, Civil, ICRA. So, in these options, there is a odd man out. Three options are related to CRH. One of them is a CIC. So, definitely, TransUnion Civil is a CIC, that is a credit information company. C is the right answer here. So now Reserve Bank of India has got strict about the government securities dealing. So they have informed the market players only to deal with government securities in the platform called eCuber, Banks, Finacle, CBS. Banks, Finacle, CBS, all of them are banks internal circular, but eCuber is the only trading platform here in the options. So the right answer is eCuber. Option number A is the right answer. So RBI extends the deadline for new bank locker agreement up to December 30, June 30, January 31st, December 31st, 2023. I know you don't need option here. It is December 31st, 2023. Option number D was the right answer for previous question. RBI has been decided to extend the deadline for banks to complete the process of locker agreement, and by what date 50% of the locker agreement is to be completed? 30th December, 30th June, 31st January, 31st December. Again, I hope you all got it right. 30 June 2023. June 30, 2023. B is the right answer. In instances where loss or content of locker is due to bank's own liability, employees fraud, then what is the quantum of penalty that bank needs to pay to the locker holder? No liability, 100 times of 100 times of the annual rent, equivalent to annual rent, 2 lakhs or 1000 times, which is less to the annual rent. We discussed it. I hope you will never forget. It is 100 times of the annual rent. The Reserve Bank of India announced for investment by residents in government securities in inclusion of sovereign green bonds. Sovereign green bonds included in FAR. So what is R stands in the acronym of FAR. Resident, root, residual, restricted. I know fully automated route FAR is the right answer. So B is here the right option. So RBI has announced the issuance of sovereign green bond of how many crore in January 25, how many crore in February 9th, and total how many crore. You can see option A as 4,000, 4,000, 8,000, B 2, 4, 6, 8, 8, 16 are none of the above. I know you remember the right answer. 8,000, two trenches, 8,000 each, total 16,000 crore. And C is the right option. GOI has committed reducing the carbon emission intensity of its GDP by what percentage till year 2030 from the 2005 level, and achieving about how many percentage of cumulative electric power installed capacity from non-fossil fuel based energy resources by 2030. 4500, 5550, 3550, 4550. So option number D is the right answer here. 45% of GDP by 2030 from the 2005 level, and 50% should be electricity should be coming from non-fossil fuel based energy resources. In case of jointly operated lockers, in case of death of any locker hirer, the contents will be delivered to the survivor. The survivors and legal heirs of the deceased, even the nomination is there. The survivor or the nominee, or none of the above. These are our internal question bank questions. So I think you will find it beneficial for your upcoming exam point of view. Not to miss such content, such questions, you need to go through our exclusive content, exclusive course. All the links are there in the description, groups, everything. To find out, explore about us, join us. And here the right answer is C, the survivors and the nominee get it. Okay. So with that, we come we complete one of our most valuable and most watched session of RBI circulars. I hope you like it. You will do your bit by sharing, subscribing, and liking this video. Thanking you all again for your love, support, and time. See you inside the internal classes.